It's Tuesday, March 31st, 2020, and I have the pleasure of speaking with Marc Faber, editor and publisher of the Gloom, Boom, and Doom report. Thank you, Marc, for taking some time to speak with me.
Pleasure.
Could you tell us briefly about your background and how you got involved in the investment business and the services you provide?
Well, it's a long story, but basically I went to school in Zurich in Switzerland, and then I studied in Zurich and later at the London School of Economics, where I wrote my work for the PhD on Sir Robert Peel, who in 1842 introduced in England the income tax as a permanent measure, not just as a war tax. And interestingly, only very few people paid the income tax. There were maybe 5,000 British subjects that had to pay it, and it was only 7% of your income which you declared. So, you know, it was not a very heavy tax, but it allowed basically Britain to give up the Navigation Acts and the Corn Laws and move mostly under the influence of the free traders that were mostly Scottish nationals like Richard Cobden, to move England from a system of protectionism towards free trade, which then proved to be very beneficial for the British economy. In any event, after my studies, I didn't know exactly what to do, but I soon found out through various interviews that the highest paying jobs were in the financial sector. So after having interviewed with Warburg and some other firms, investment banks, I got a job at White Weld and Company, which was a New York investment bank and broker, and I started there in the US. And in '73, they suggested to me or asked me whether I would like to build up their business in Asia based out of Hong Kong. So I went to Hong Kong and I built up the investment advisory business and the brokerage business in Asia. And in '78, White Weld merged with Merrill Lynch. And then I opened the offices for Drexel Burnham Lambert, which I then ran in Hong Kong and Singapore on the security side until 1990 when they went out of business. And then I started my own business. And I started already in the '70s writing a commentary. It wasn't at the time called the Gloom, Boom, and Doom report. It was called a weekly commentary on the US stock market. And so I've been writing for a long time, and I've been in this business for a long time. And then I'm like an antiquity by now, a veteran or a dinosaur. So essentially what I've done in my life.
Yeah, and it's interesting you talked about the income tax. I always heard that when they brought it up after the Napoleonic Wars, they said it would be temporary. And here we are 200 years later, and we still got it.
Well, every government program is usually introduced as a measure of urgency, like QE1 in the US. And when they introduced in December 2008 QE1, I immediately said, this is QE infinity. Because once you embark on money printing, it's extremely painful to give it up. And I just like to remind your viewers, the recent money printing in the US, which I define as an expansion of the Federal Reserve's assets or balance sheet, began in August 2019 when the first stress manifested itself in the repo market. So between August 2019 and essentially January of this year, the increase in the Fed's balance sheet had nothing at all to do with coronavirus, nothing at all to do. The coronavirus is now used as an excuse for everything to intervene into the free market, into the economy, and also into your personal freedom.
I agree completely with that. And now the balance sheet has gone up by almost $1 trillion in the last week. So who knows where it's going to be. Just wanted to ask you, because in your latest monthly commentary for April 1st, you talk about the current markets and how some are wondering whether it's time to buy the dip. Can you give us your opinion on what's going on right now? I mean, I've looked at 1929 when the stock market topped in September. It crashed all the way until the beginning of November, and it actually rebounded up until end of April 1930, but then it just went down all the way to like minus 89% in 1932.
Yeah.
So do you think we're on the same path?
Well, I mean, there are corrections within secular bull markets, like 87 was a severe correction from peak to trough, 40%. And in one day, on October 19th, it was 21% of the Dow. And in Asia, some markets were closed for a week and dropped 50%. So, you can have that. But you can also have the 29 scenario that was followed by the Depression. You can have the Japanese scenario, 1989. The ultimate low was in 2008. It's almost 30 years later. 20 years later. And you can have the NASDAQ, like in 2000. It peaked in March 2000, dropped 40% in 2 months, rebounded, but then went down 83% into a low in October 2002. So there is a huge variety of declines, and some, as you say, we are probably in a phase of a strong rebound, because never ever before has the US market, as defined by the S&P 500, dropped by 30% in such a brief time. Never before. So the market became extremely oversold. We have now rallied approximately 20% from the low. I think we can rally back to around 2,800, maybe even 3,000 on the S&P. But I don't think that everything will be fine thereafter. You understand? I think the coronavirus is kind of a catalyst. The economy, the global economy, was slowing down before, and we're not going to go back to strong growth anytime soon. I think the damage occurred already before coronavirus. We have excessive leverage in the economy. It's clearly a fact, in the corporate sector, in the household sector. And, people point out that the savings rate in the Western countries is relatively high. Well, this is statistically true, because wealthy people and high income earners, they have a saving rate of maybe 90%. But the lower income earner, the 50% of the population, they live paycheck by paycheck. They have no saving at all. The government has no saving, nothing. So my view is this is going to be more serious. We are facing a demand shock. In other words, demand suddenly collapses. The supply is still relatively high, as we see in the oil market. That's why oil prices are down. And I think the likelihood that the so-called asset inflation we had since 1980, 81 is coming to an end, with asset prices in general lower in the next few years than they were 18 months ago.
Yeah, and the other thing I saw, you were talking about savings. I was looking at the Federal Reserve's website, and they have a section where they give you the wealth distribution, and I think the top 10% own 7/8 of all the corporate equities. So the bottom 90% almost have no savings.
Correct. You know, the lower end of the income recipients, they have IRA accounts and they have pension funds. But unfortunately, the pension funds are grossly underfunded. And in my view, the pension funds and also insurance companies will have to pay out less or charge higher contributions or both. You understand? So I wouldn't rely on my pension fund because it's likely that they will not pay you what you expect.
That's correct. One more question as well about the central banks around the world. Do you think, and also I guess the governments, do you think their stimulus, massive stimulus they're coming out with, do you think it will be enough? Because I compared as well with the 1930s. The debt to GDP in 1929 was 16% in the US of GDP. And the New York Fed actually cut the discount rate from 6 to 1.5 from 1929 to 1932. So do you think all this money printing, rate cutting, fiscal stimulus will work this time?
I don't. Also, the stimulus package, if you analyze it, it's total, say, $2 trillion, $2.2 trillion. But very little of that goes actually to the household sector. You understand? They say, oh, we give out $1,200 per American. Yes, but this amounts to maybe like maximum 30 billion. But the whole package is 2 trillion. Is a payment to the bureaucrats, to the bureaucracy, to government agencies. The bailout is basically a transfer of wealth from taxpayers to the government. And this is what I object to this bailout and to this support package. Basically, it enlarges the government. You will end out with a great leap forward into socialism.
What about the, some people say the package is actually 6 trillion and that it's also bailing out the corporations in Wall Street, aside from the government.
Yes. If it maybe all together, you know, with the Fed's balance sheet expansion, it will be around 6 trillion. But it will be around 6 trillion or 10 trillion anyway, because after this support package at the present time, where they pay a month's salary to Americans, $1,200, as I just mentioned, in my view, this will become a permanent measure. This is basic income. Now, some people say, oh, basic income is very good. I would say, no, it's not particularly good. It's completely against the capitalistic system. It moves you very close. And this is something that people don't realize. Trump is not at all in favor of free markets. Trump is an interventionist par excellence. He's like a dictator, like some Latin American banana republic general who thinks he knows everything, so we'll do this and we'll do that, and we'll spend some money on this, and eventually you have a complete mess.
He's like Chavez or Maduro, who he's trying to get rid of.
Yes, he's similar, yes.
All right. I just saw in the papers that they're most probably going to cancel Wimbledon in July. So it looks like this crisis could go on for a long time. And I wanted to know, when do you think, how long before we're going to see bargains for people who have saved money and would want to invest or buy property or like a nice Swiss watch or something like that? Do you think we're nowhere close to that? We'll have to wait a while?
Well, the market decline has been very severe, and over the last 2 months. And before that, value stocks had grossly underperformed growth stocks for several years. So the value stocks were relatively inexpensive before this happened, but they completely imploded as a result of the recent rout in the market. And I'd say, under normal condition, I suppose that oil companies and energy related is inexpensive. But you understand, then you have another set of problems, and these are the Greens and the climate change advocates. And therefore, the oil sector may not fully recover. And Occidental Petroleum, as an example, was perceived as a value stock, and then they cut the dividend by 79%. So I'm not so sure that I would buy stocks here from a longer term perspective. If the idea is to buy stocks for a rebound, I think some stocks will continue to rebound here, including emerging markets. And I think there are some sectors in the market that got hit so hard, like in US and Canada, the cannabis sector, you know, the essentially marijuana sector. They are extremely depressed. All these stocks are down like 90% or more. So these stocks may offer some interesting entry points. But I don't think as an investor you need to rush out. It's like when the Japanese market collapsed by 40% in 89 to 1990, you could buy it for a rebound, but then it continued to go down for 20 years. You understand? So as an investor, I would suggest the boom we had in the economy post 2008 was a boom, an artificial boom. It didn't come natural. It was as a result of money printing and large deficits and increased borrowings. You know, debt went up. But it wasn't a genuine economic boom, and the majority of people didn't experience the boom at all. It was a minority, the asset holders, people who held a Picasso or a Warhol or a large property on the Côte d'Azur and so forth, or in Mayfair. But by and large, the ordinary people didn't experience the boom. And I think the recovery will not bring us back to the level of economic activity we had at the peak, say in 2017, 18.
I see. And what about precious metals? Because my channel, we cover a lot of precious metals, and we are heavily critical of the central banks, and we think it's a good insurance against central banking recklessness.
Yeah, sure. That I agree. But as you know, to the surprise of many people who essentially are called gold bugs or gold advocates and so forth, including myself, the gold price hasn't been acting well, and gold shares got hit very hard as well. This is what I said before. You know, the value propositions, they got hit very hard. Now, you have to ask yourself, we all recognize that the monetary system, that there is something wrong with it, and that it can't last forever like this, and that eventually gold relative to paper money will be in short supply. That we all know. Now then you ask yourself, why is gold not much higher? Why isn't it at, say, $3,000 an ounce, and only now, today, probably a little bit below $1,600? And I think what happened beginning in the second half of last year, there was tightness in the money market and among leveraged institutions. And when the coronavirus occurred, leveraged positions had to be liquidated because the leveraged holders of assets, they were called margin. You know, there are lots of people who bought stocks on margin. They bought bonds on margin. Because you have to understand, when the central bank pushes interest rates to artificially low levels, the returns on assets becomes minimal. Say, in the 70s, 80s, 90s, and first 10 years of this millennium, you could earn on bonds, quality bonds, say 6%, plus minus. But now you only earn negative rates in Europe, and in the US on treasuries, it's less than 1%. And on corporate bonds, it's something like 4% or 3%, depending on the quality. So what the private bankers did, they went to the clients and said, well, we're terribly sorry the returns are so low, but you can boost your returns by buying on leverage. So here you invest $1 million, and we can leverage that up to 10 million. So that game boosts your returns enormously because you invest in something at 4% interest and you borrow at, say, 2%. I mean, plus minus. And that game went on for years and years because volatility was low. But now suddenly these assets sold off, including junk bonds and emerging market bonds and so forth. And the guy who is leveraged, he gets a margin call. And there are hedge funds in the US, they have a leverage of 100 to 1, including Citadel and Millennium. And these are the people that actually were creating the repo problem.
Yeah, and I heard the Fed bailed them out.
Yes, you know, they bailed LTCM in '98. That opened the floodgate for the saying, there's a Greenspan put, then later a Bernanke put, then later a Yellen put. And so we had the bailout in 2008 of financial institutions, in particular AIG and Goldman Sachs, has to be spelled out very clearly. And what did the regulators and the banking system learn? Well, they learned that they will again be bailed out if they are big enough. The small guy, nobody will bail you out, you understand? Nobody will bail me out. But if you're a big institution and you have, through your size, you could kind of cause some damage to the financial market, they bail you out. The Fed is basically hostage to large financial institutions.
Yeah, we could see that. I mean, I could see that in '08 because it's like a child. If they do something wrong, you need to punish them, and they didn't punish them in '08. So they're going to keep. They're going to keep acting.
They rewarded them.
That's right.
But I'd like to add here one point. So you see, these margin calls went out. Now, the media has done its best to downplay gold and silver as an asset, you understand? But the fact is, since the beginning of 2016 or since the end of 2015, gold is up 50%, 54% to be precise. And if you look at the Russell 2000 index, it's no higher than in 2015-16. Some stocks are higher, like the FANG and FANG related, and also semiconductor stocks. But basically, gold has performed well. Now, the margins go out to the financial asset holders. And the only asset that they have that they can liquidate very quickly is gold. You understand? And it doesn't cause them any pain. So I think this was the reason that gold hasn't done so well. There were margin calls in gold.
Yeah, and
Not because of gold, but to cover the other losses.
yeah, we're seeing here, like in the UK and elsewhere, like on the retail sector, the last few weeks, there's actually been a shortage of coins and bars. So
Yes.
actually, there's still a lot of demand by investors, and it's increasing.
I agree with you. There's a physical tightness, but in the paper market, I think some big institutions had to rebalance their portfolios because these are mathematically calculated portfolios and so forth. And also they used gold to cover some of their margin calls elsewhere. This is my view, because I hold gold and I've been always a proponent of owning gold. But I thought already 6 months ago, given that the Fed is again expanding its balance sheet, gold isn't acting very well, and gold shares haven't performed that well either. In fact, some gold shares have been hit like 60% in just 1 month.
To finish off, I know you look at investment as well in a geographical manner. Just wanted to ask you, where do you think will be the best place to invest in the next 5 to 10 years around the world? And maybe talk a little bit about the UK and the US and maybe even Switzerland, because that's where you're from. And I also have some family there, so maybe it could help them.
Well, I think that if you look at the performance of assets over the last 6 months or so, an important consideration is the currency. And I'm sorry to say, I really cannot be optimistic about the outlook of the US dollar. I think the dollar is going to go down massively sooner or later. Can't tell you on which day, but I think it will exhibit weakness like in the 70s when the dollar really went down for 10 years. And so I believe that maybe the best investments are not in the US, but actually outside the US. And each investment is very much tied also to the individual. Say an individual, he has a little bit of money, but not much. Maybe for him, the best is to buy a house in the countryside somewhere. Because nowadays, we're talking here through the internet. You could live anywhere in the world. You don't have to live in Mayfair or in Chelsea or in Knightsbridge. You can live anywhere. And I can also live anywhere. This wasn't possible 30 years ago before we had the internet. It was much more complicated to communicate. Now, also, if you're on the board of a company, you can have all the board meetings with what we are using at the present time, namely Zoom. So I think that this might be a good idea for some people. Secondly, I would advocate to have at least some of your assets in precious metals. I have friends who are the converted gold bulls. They have 90% of the assets in gold. Eric Sprott, Tom Kaplan, and so forth. These are really the true believers. They are the dogmatic gold believers. They think gold will be by far the best asset and so forth, which I think they may be right. But I run a balanced portfolio consisting of bonds, equities, real estate, and gold and silver. Real estate, I'm not very optimistic. Depends also on the location. But I think commercial real estate is toast because a lot of people will continue to work from home. the companies will be happy to tell them, look, stay home. And they may not come back to the centers of cities. Once these people don't come to the center of the cities every day, the retail space is worth much less, because more and more people will not buy in the city. So the brick and mortar retail business, I think, will be bad. I think a lot of luxury shops will close. They'll find other ways to advertise, because most shops nowadays is an advertising front, more so than a sales transaction. And so I think that real estate, commercial real estate, will be quite bad for quite some time. And equities in Asia, we have now what I would call reasonable valuations. I also happen to think that in Asia, we will come out of this crisis relatively well, because the Asians, they took quite strong measures right from the start. You know, people always accuse China. There's an anti-Chinese sentiment in the world. The Chinese do this wrong and that wrong and so on. But the fact is that compared to the size of the country, and also in consideration that they grossly underreport their cases. I mean, they lie, but we lie as well. Every government is characterized by endless lies. So the Chinese, they have many more cases than they reported. But my friend, he lives in Shanghai in a residential complex. Each person who leaves the building and comes back is tested for his temperature. You understand? They take these measures seriously, and there is tight control on the population at the present time in terms of not spreading the virus. Try to do that with the homeless in America.
Yeah, it's and in America, you don't have a central government that is that strong. You have all the different states that dictate.
Yes, you have these fiefdoms, these kleptocracies like Kingdom of Pelosi,
Pelosi.
Empire.
Arkansas, Clinton, Arkansas.
Yes.
All right. Mark, thank you very much for your time. I enjoyed talking with you. I hope to speak with you soon in the future. Take care.
Yes. Thanks a lot.
You're welcome.